Hello traders, welcome on a daily analytical report. My name is Tomasz Wiśniewski and I'm a chief analyst in Alpar Research and Analysis. And this is the first daily analytical report in 2017. So we have liquidity back, we have a bit of volatility right now, and we're coming back to the normal tradings. We usually advise not to trade between holidays because of the low volatility, and those signals created during that time are not very good. We shouldn't rely on them. We shouldn't make transactions based on those signals. But we are working that time. We are constantly analyzing the markets. We are posting our trading ideas on Twitter and our website on different portals like FX Street, FX Empire, Investing, etc. And most of our analysis were spot on. So it's good to stick to Alpari research and analysis and trade on the markets with our help. Okay, let's take a look on the calendar. Right now it's not packed with data. Next week will be more interesting from the fundamental point of view, but still we have some interesting readings on the market. But not today. For today we finished with an important data. Tomorrow will be important for British pound. As you can see, manufacturing production, industrial production. Recently we got some hints about the possibility of a hard Brexit. That is why pound is going down. Maybe better data from British economy can help the British pound. In our opinion, we wrote our outlook for 2017 for the major currencies, and we stated that the possibility of a hard Brexit situation is rather low, despite the fact that Theresa May indicated that we may be approaching hard Brexit situation. We do not think it's going to happen. We still think that it will be, if the Brexit will happen, which is not very clear, if it will happen, it will be rather a soft version of the Brexit still, even after those comments from Theresa May, because still it is too early to say actually anything. So those worries about hard Brexit for me are just too soon and too big. Okay, but coming back to the calendar, as you can see on Wednesday, no major data. On Thursday we have ECB monetary policy meeting accounts and also industrial production. And on Friday, retail sales from United States. So actually not a well, still this calendar is bigger than the last week, but not so big and important as usual. As you can see, we got the CPI from China. This data came slightly worse than expected. We see a huge money outflow in China for the past few months. Yuan is weaker against the dollar. In my opinion, it's affecting the global economy very much. We cannot even see that how big is the influence. Well, normally we cannot see how big is the influence of this money outflow from the reserves in China, but it affects almost every economy in the world. Also, this data do not help much for the yuan. Let's go to the charts right now, and we will start. Maybe let's start with indexes and oil. On oil, I have Brent oil for you. So we had this upswing, head and shoulder formation, but they didn't use the head and shoulder formation. Instead of that, and they used the pennant formation. So the price went higher. So this didn't work out. We can delete them. They went higher, but after that the price declined. So this line is gone too. What we have left is this lower, that was the neckline. Now it's a lower line. Well, it can also be considered as a neckline of the double top formation. As you can see, this first top, this is second top. Let me add additional indicators to see if we do have divergence here. Probably yes. Yes, we do have. Maybe on a daily chart. Okay, let me set another one. RSI. Okay, so as you can see, the price is making higher highs. MACD is not making higher highs. And RSI is not making higher highs either. Is it a thing on hourly, on H4 chart? Yes, it is. Here and here. And here and here. All right. So, well, I'm not a fan of indicators. For me, divergence, double tops, double bottoms are not strong formations. But I know that for some of you it is important, so I'm showing you this situation on oil. So far, going short signal is not created, as we are defending on this line. Also, there's a horizontal support here, which I just painted for you. What would be nice in this situation is to wait for a breakout with, in my opinion, sell stop order. That's my solution for oil, for the current situation on oil, because well, buyers can still use that place for a bounce. Sell signal is not active, as we are above this support. Once we will be able to break it, this will activate the sell signal. Alright, so that's a quite interesting situation on Brent. Oil possible bearish reversal here. Next instrument I would like to show you is Nasdaq. During Christmas time we had a side trend, then we had a bullish breakout after Christmas, before New Year's Eve, but again that was a false bullish breakout in the short term. That's one of the examples why you shouldn't follow those signals created in times of the low volatility. The price declined, broke important supports, and again that was a false breakout, which happened around New Year's Eve. After that the price went higher. So both false breakouts happen during the times of the low volatility, low liquidity, and for me it's a perfect example why you shouldn't follow trading signals in that times. Now let's go to the Forex market. What do we have here on the Forex market? Let's start with dollar, American dollar to Japanese yen. Here, remember this horizontal support as well. I hope you see it. It was a support in December 2014, January 2015, August 2015, January 2016. It was a resistance here in December. It was a support here in December. So this is a legitimate place, 116. We bounce from the resistance created by the line connecting recent lower highs, and now there is a battle for this horizontal support here. I would say that if the price will decline below this level, we may experience a deeper correction. But so far, so good for buyers actually. Let me change the color. Why is that? Because it's a normal trend continuation pattern. This is a wedge actually. Trend continuation pattern, trend is still bullish. 116 is not broken, right? As you can see now, there is a fight going on this level. So we cannot say that if we're 10 pips below that level, that this level is broken. No, it is not. This fight is still on, and we cannot make any final decisions about this level. It can be defended, it can be broken. That is why what I'm seeing here is pending order, not buy or sell with an instant execution. Interesting situation on American dollar to Mexican peso. Mexican peso is losing, is weaker again. As you can see, Trump is elected as a president. Then there is a rectangle. Rectangle is a trend continuation pattern. So technical traders could expect an upswing. Upswing happened, then a correction, and then a further upswing. So here, sentiment is definitely positive. Next instrument I have for you is Euro to New Zealand dollar. And on Euro to New Zealand dollar, price is fighting on a trend line, and most probably this trend line will be broken. But what I'm waiting for is a correction equality pattern. As you can see, those two corrections were the same, and I'm waiting for the price to make another the same correction, especially that this correction equality pattern is very popular with New Zealand dollar. It doesn't matter if it's New Zealand dollar to American dollar or euro to New Zealand dollar, but it just happens. If we assume that this is a pennant, and we should see a bullish breakout here because it was pennant followed this upswing. We can see an upswing here, and it would be beautiful if this bullish correction stopped exactly here on the tops from the November, because that would also be a correction equality pattern. So this correction would be the same as this one and this one. That would be a geometrical, maybe not miracle, but a very nice geometrical occasion to go short. So on this pair, I'm waiting for an upswing, 260 pips upswing, and then major movement south. Canadian dollar to Japanese yen, we stopped on an important horizontal resistance. Yes, we broke this trend line. We also used this as a closest support. As you can see, the broken resistance became a support, but they still have a horizontal resistance which they just cannot break right now. I would say that if you're a bull, then you believe that this price will continue to go up, it would be better to wait for a breakout with a pending order here, or just wait for the breakout and open with the instant execution once the price will be higher. Right? On the other hand, what I would see here is something like that. This is a horizontal support, and if the price would come back below this level, that would be a double top formation on a very important horizontal resistance here, and that creates an opportunity for a nice short position. So to sum up, buy stop in terms in case that the price would go higher, sell stop in case that the price will go lower. We will see what will happen. And again, a quick reminder, many experts, analysts, they just tell you what happened a week ago, what happened a month ago. How can you use that for your trading? Well, you cannot. You can use that for your education, but it's easy to explain what happened, right? When you have a history. It's much harder to trade, and what we are doing in our videos and our analysis, we are trying to prepare you for the movements. So if you will have an upswing here, you will know if it's a relevant thing and if it activates the buy signal, and you will be able to act. In the same time, you will know if you will have a downswing. You will know what you have to do, if it's a relevant, significant downswing, if it activates the sell signal or not. So what we are doing is preparing you to act in the future, that you can benefit from those movements. So we are not focusing on the history movements because it's history, right? We like to review the history because we know that history likes to repeat itself, and it's one of the foundation of the price action and technical analysis. But in the same time, we are trying to use that to give you scenarios for the future, not to explain what happened in the past. Next instrument is Australian dollar to Swiss franc, where we are locked under the horizontal resistance here, created by 38.2 Fibonacci level. Also, that was a wedge. So we gave higher chances for a downswing, and actually the downswing is happening, but we stopped on this lower line of the wedge, and I would say that the sell scenario will be back on once we'll break this horizontal resistance here. So far it is just a side trend, and you know that we don't like side trends. We do not invest in side trends. We are trend followers, trend traders, because we know that there are always higher odds for the trend to be continued than to be reversed. Australian dollar to Canadian dollar, I was waiting here for a movement to this point. In 2017 we almost got here, we just missed 40 pips, but in the movement of 800 pips, if you miss 40 pips, it's not much. Why we anticipated that the price will go lower? Because we had this horizontal support here, which was broken. After the breakout, we had this rectangle, which is a trend continuation pattern. We had a false breakout here, so the price went significantly lower. We are still below this horizontal support. If we will keep below this level, it keeps the sell signal alive. Once the price will come back above this level, that will be the end of the sell of the bearish sentiment on this instrument. Something from the major group, what do we have here is a New Zealand dollar to American dollar. And on a daily chart, you know this situation, there is a downswing, there is a flag, there was a downswing which happened after head and shoulder formation. So we broke the lower line of the flag, we went below the neckline, we started making lower highs and lower lows. As you can see, lower high, lower low, lower high, lower low, lower high. And it often happens that after the breakout from the flag, you test the recent support, which is the lower line of the flag, you test it as a resistance. And as you can see, it happened, and it happened Thursday, Friday, we got a bearish engulfing here. I spotted this formation and I wrote an analysis that it's a nice sell signal, but what I'm missing here is a reaction on Monday. Because on Monday, as you can see, it's this bullish candlestick here, the price went up. So it looked like traders ignored the signal from the last week. It looks like we're back to the sell signal again. Also with a double top formation here. Too many instruments. If you believe in this bearish engulfing, you would place stop loss somewhere above this formation. As you can see, we went slightly higher, but it was 10 pips, and when you invest on a daily chart, it's a long-term situation, you have much wider stop losses. So for this position, the stop loss would be somewhere here, at least 15 or 20 pips above. So you would still be alive with this short position that we spotted recently. And as you can see, the price is advancing lower. If we will break this line in the midterm, that would activate the sell signal, and this bearish engulfing will be on the table, right? As you can see, yesterday a very good day, and now we're retracing all that movement, and sell signal is back on the table. The most important instrument, well, maybe not the most important, but the most popular instrument on the market, euro dollar. And the volatility wasn't crazy during Christmas and this week between Christmas and New Year's Eve, but we had side trend, so both movements in upswing here before New Year's Eve, downswing after New Year's Eve. We made new midterm highs, new long-term lows, and we are still locked between horizontal resistance here and a horizontal support here. I don't think that there is a buy signal here right now. I would wait for a breakout of this upper line, of this upper blue line. So far for me, euro dollar, which is usually not very interesting instrument for my strategy, euro dollar is now in a side trend, and you know that we don't like to trade in the side trends. We don't find these situations useful. New Zealand dollar to Japanese yen, we have few pairs with Japanese yen. Here the situation is more or less similar to this one seen on American dollar to Japanese yen. What I was having here for some time was this nice correction here. Wanted to show you here, or maybe here. It doesn't really matter. Both are flags. We have a breakout. If we will be able to close a little bit lower, that would activate the sell signal on this instrument, both midterm and long term. Because long-term sell signal was on this instrument was created here by this shooting star on a weekly chart. As you can see from this, we are 150 pips lower already. Nice display of price action trading, right? So broken support becomes a resistance, is tested once, twice, third time. And as you can see, shooting star on this level is not a joke. Shooting star, the price went significantly lower. Shooting star, there is a potential for the price to go significantly lower here. As you can see now today, New Zealand dollar is much weaker against major currencies. Euro to British pound, here you know that we are advising going long. Why is that? because this horizontal support was created, was defended. There was no head and shoulder formation. Also, we broke from this pennant or a symmetric triangle. Also, we broke this horizontal resistance here, and now the price is advancing higher. We are 250, 200 pips higher than the time when we were advising to go long here. Obviously, you can check that on our trading sniper videos, on our daily analytical reports, that our view on euro to British pound was definitely bullish, and that's what's going on here. Next instrument I have for you is euro to Canadian dollar. Here also we had false breakouts here, but again that was this week between New Year's Eve and Christmas, where again you shouldn't pay too big attention to the movements on the market. What is nice here is a daily chart. We have this horizontal resistance now. We had an attack also on the neckline, because this is a neckline of the head and shoulder formation, left shoulder, head, right shoulder. After the breakout, we had a test of this line. Test resulted with a shooting star here, and that gave the sell signal on this instrument, and the sell signal should be continued. Australian dollar to American dollar. What we are having here is a beautiful downtrend, correction, which is a wedge, downtrend again, and a correction. And we were also saying that this horizontal resistance, which is created by lows from November, it may be too early to say that we will have a reverse here. Why is that? Because a little bit higher we had this trend line, as you can see, this red line. We also had 50% and 61.8 Fibonacci level, and foremost we had this correction equality movements. So as you can see, this correction had 212 pips. This one had 225 pips. So not a big difference, but it looks like on a daily chart, it looks like a double top formation, and that finally we'll have a reversal here. Even if with the breakout of the trend line, we can experience a nice reversal. Here it's a double top formation, also 61.8 Fibonacci level. It looks really promising for the sellers. Last instrument I have for you on the daily analytical, on the first daily analytical report in 2017 is American dollar to Canadian dollar. Here you know that for a long time we have a downtrend here. Then this correction. This correction is still a flag. I thought, there are chances that it will be transformed into a channel up formation. But for that, you would have to see a breakout of this 50% Fibonacci. We didn't get that. As you can see, before New Year's Eve, we had a contact with the resistance, 50% Fibonacci and previous highs. From this level, the price bounced, went lower, and now stopped on a support created by a lower line of the flag. Let's look at that in greater detail. As you can see, this first contact with the support was created here with a bullish engulfing. So touch, reversal. Another one, touch, reversal. Another one, touch, reversal. And now we have a touch, and we are not seeing a reversal. Let's look a bit closer to that. So instead of the price going higher, we have a consolidation here. Also, yesterday we had a great chance for an upswing. Let me change the color not to confuse that with Fibonacci's. Here we had a great chance because the price made lower, made left shoulder, head, and a right shoulder. What we are missing here was a breakout. Neckline would be here. Instead of that, instead of the inverted head and shoulder formation, we do have a rectangle. Rectangle, as you know, is a trend continuation pattern. So what we should expect here is a breakout of bearish breakout from this rectangle, which in the same time would break the lower line of the flag, which is possible because we do not see a bounce here. As you can see, this pair likes to bounce straight away. So far, we do not see that. The price consolidates above the support, which indicates that demand is low and supply is increasing. Supply is increasing the pressure for a breakout. But again, if you're not convinced, for those traders, sell stop or buy stop. For us, there are higher odds for a bearish breakout, but still, for that we need to see a breakout because we are still in a flag. You shouldn't enter with a short position when the price is still on a flag. You should wait for the breakout because breakout increases the odds in your favor, right? And we want to have our odds increased. So we want to open a position now on our live trading account because, well, you know that we do have a live trading account, which is obviously positive where we trade. We show that account on our live seminars across the globe. We explain every trades that we are making. And if we will see a significant bearish breakout here, we will think about adding a short position here on this instrument to our account. Okay guys, I hope with this daily analytical report you know a little bit more about the markets, about the current situation. I hope you have some you're gonna use some of those occasions. Thank you for watching first daily analytical report in 2017. Remember to follow us on our Twitter account where we post our trading ideas. Also on our website alpari.news where we post our articles. And those articles explain the situation on the market in the greater detail than those short ideas on the Twitter account. Thanks very much, and we have a short break, and after that a webinar about basics of Forex market. Thanks very much. Also remember that trading and investment in financial markets involves an element of risk. Thanks very much and goodbye.